Today we are looking at one of Warren Buffett's favorite stocks, the Coca-Cola company, ticker KO. We're going to be looking at the stock price, then the fundamentals, and give my fair value of the company based on discounted free cash flow and Warren Buffett's intrinsic value calculation. Then we'll be looking at some technical analysis. But currently, Coca-Cola is at around about $56 a share, down from its all-time high, which just breached 60 pre the pandemic. Look at that value down at $36 during the pandemic at the very bottom. What a great time to buy that was. But we are right here, and is the stock going to continue to all-time highs? Just before we get into it, this is Coca-Cola versus the SPY, or the S&P 500 index. Over the last 5 years, you can see the SPY has handily beaten Coke with 120% gains to 40%. But if we look at the all-time chart, this is why you can see this is one of Warren Buffett's favorite stocks, with gains of over 7,600% compared to the 3,700% of the S&P 500. And that's why it's one of his favorite stocks and why I'm going to look at it today. So before we get into that, can you please give a like on the video? And now we will continue. So Coca-Cola, it's in the consumer discretionary section. It has a share price of $56, 52-week low of $48, and a 52-week high of $57. It pays a very healthy 2.98% dividend, and the ex-dividend date for this is the 30th of October. So buy your shares before then if you want to be eligible for the dividend. First is the P ratio less than the market. Yes, it is 27.89 to 28.5, so that is a pass. Next is the revenue increasing 32 billion to 38, so that's another pass there. Then we want to look at the profit. Has the profit increased 6.5 billion to 8.8, so that's excellent. Looks like we're going for a clean sweep, but unfortunately, Coke has increased their shares outstanding 4.272 billion to 4.295 billion. So I just want to take you to this chart here. This is Coke's shares outstanding, and the data only goes back to 2006, but you can see Coke was pretty consistently, apart from a little period here, buying back their shares very consistently up until 2018, where they stopped, and they have been issuing new shares since then. Not massive amount, but you can see basically they've undone about, well, a year of buying back shares in 2017. So they have been issuing more shares since the 2018. So interesting to see why they're doing that, but they are issuing more shares. So let's just continue. Is the free cash flow increasing? Yes, it is 6.2 billion to 1.7. So overall, that is 4 passes. A free cash flow ratio, which is the market value divided by the free cash flow, at 20.77. So lower than the PE ratio, which is good to see. The dividend they pay is 7.2 million, and with 7.2 billion, and with 11.7 billion of free cash flow, they can easily pay off their dividend. So no worries there. Now let's have a look at the value. I've calculated the future free cash flows. As you can see here, 2021 had $11.7 billion in free cash flow, whereas in 2022, the estimates here, this is because this number is slightly outlier. So we're going to go through this first and see what that gives us. And it gives a calculated stock price of $61 a share, which means it's currently trading at an 8% discount. But if you think that 11 million is not really an aberration and it's going to continue at that, if we just increase that a little bit to, well, say it increased to 133%, that would actually give a calculated stock price of $74 a share, which is a 30.8% discount. Now we look at the Buffett Graham intrinsic value. This is earnings per share and expected growth, and that would actually give a stock price of $77.93 a share and a Graham price of 58.45. So both of those are above the current price. Graham price is buy and hold, and then the actual fair value based on this model. So both models really liking the stock, depending on what you think the free cash flow is going to be. If it's a little bit more reserved, it still looks like a buy according to discounted free cash flow. And the Buffett Graham intrinsic value also thinks it is a buy. Next, we just want to have a look at what the analysts are saying, and the analysts would agree with a moderate buy, 4 buying, 3 holding. They have the low side of around $55, average of 61, and the high side of 65. So the model is looking a bit more bullish than the analysts, but everyone is pretty much in agreement that the stock is a buy. Now we want to have a look at some of the technicals here. I have a 50-day moving average in green, 100-day in yellow, and the 200-day in red. So as you can see, the price has broken all three major moving averages, which would be a buy signal. This has done, the stock has done this pretty consistently in 2021. It's broke through them and continued for quite some time until it's eventually dropping through. So that would be a buy signal. If the price also hit the 200-day moving average, that would be a massive buy signal. It's only broke below it twice. Well, obviously the pandemic really hit the stock hard, but you can see under more recent times, whenever the stock has broke below the 200-day, it's never been there for long and immediately broke through. So that would be a definite buy signal there. Next, we want to have a look at the MACD. So let me just get rid of these indicators here, and then we'll open up the MACD. This is the moving average convergence divergence. And what we want to look for here is what the stock, so you can see currently the stock is in a very bullish price movement. It was a buy signal down at $53 a share, and you would have bought and held consistently. So the momentum is still on the up, but you can see it's kind of trending a little bit negatively right now. But normally when the stock goes, you can see it's been pretty good. Whenever it's crossed the green, for example, here's a great time you would have bought. You would have bought at around about, what, $48 a share. And you would have held up until 54. Once again, what happened here? $53 a share, and you would have sold at 50, 56, 57, and now you would have bought at 52, 53, and you'd be holding until the stock drops back down and the MACD and signal line cross. So if you are going to wait, I would say either buy now, ride out the momentum, or what you can also do is wait for it to cross into negative territory again. Pick your point to buy it once it crosses to the green again, and then you would hold. So the MACD has been pretty good and pretty consistent with Coke for quite some time. And finally, what we're going to do is look at the RSI, which is the relative strength index, and see what the stock's doing. So you can see that the stock currently is in the overbought region. It doesn't often cross higher than the overbought region, but you can see that these are sort of consistent times it's been overbought. And then we have had some price consolidation here. This was a pretty big dip. But the price tends to stay a bit flat before going off in the oversold regions. But if you look here, you can see if the stock ever goes into the undersold region, two major points was January and October. These are massive buy signals. Let's just take it out a bit longer and look a bit more. Yep, that would have been the pandemic. Buy signal, and you would have raised it all the way to the top. So RSI is saying it is in the overbought region at the minute, but it has been there consistently and the price hasn't dropped too much after. But if it ever gets into this oversold region, that is a definite buy signal for Coke. Right guys, thanks for watching. Please give a like on the video if you've enjoyed it, and I will catch you guys next time.